Hey there, my name's Curtis Lucas and you're watching Empire Building. Well, here I am again the very next day recording yet another video. There has been so many things happening in this space that it's been very difficult for me to keep up to date on. We've seen some substantial moves in this market right now across the board, with Bitcoin showing an awful lot of strength, surging yet again above $40,000, currently sitting at around $41,000. And yesterday, I saw one article making the rounds on Twitter. Even Marathon Digital retweeted this, that it was reported by, I believe it was Forbes first, that Fidelity Investments took a 7.4% stake in Marathon. We're going to talk about that, and also Digital, a company that I had covered way back in January when I raised some red flags with this company and urged caution for those considering investing in it. I got a kick out of some of the comments that I've received over the last few days now that it's been surging. So I'm going to take a second look at that and evaluate what's changed since the last time I reviewed them, and whether or not it might be considered a good investment today. So doing a quick Google check on the words Fidelity, Marathon, and Digital, we can see a ton of articles all claiming or reporting on the 7.4% stake that Fidelity supposedly took in Marathon Digital Holdings. When we go into the actual article originally published by Forbes, this reporter highlighted that they took approximately a $20 million stake in Marathon Digital Holdings. And last time I checked, Marathon was roughly nearly a $3 billion company. So how is it that $20 million gets you a 7.4% stake? Well, it's simple rounding error. Not even, it's a decimal place error. That amounts to closer to a 0.7% stake. So this actually I was puzzled about for quite some time. So I looked a little deeper in this. I tried to find out what their source was. And further down in this article, they do highlight or provide a rather blurry table here, which I took a much closer look at. And they do highlight the four positions, four separate entities that Fidelity used to make that purchase. Combining these four entities, you get a total of 720,146 shares in total, which at the time of this publication had an average, or perhaps when they entered it, had an average share price of $27.46, which gets you to just under $20 million position. But that is certainly not a 7.4% stake. Anyways. We all make mistakes. I'm a victim of that myself, but I did think it was worthwhile pointing out that you gotta maybe check your sources. And I'm surprised that with all of the different other outlets that reported on this, nobody fact-checked this. Just goes to show how lazy journalism can be these days. Now, having said that, it's still very good news to hear that more and more institutions are choosing to invest in these companies. Despite the fact that we're hearing a whole lot about more regulatory crackdowns on cryptocurrencies, the institutions are still coming. They are continuing to accumulate. And as far as institutional ownership is concerned, Vanguard Group actually does hold approximately a 7.6% share, or a 7.6% stake in Marathon Digital, legitimately, which is closer to over $200 million currently. And that's only as of March. We're still waiting to see when these numbers get updated to see what, if any, shares might have been added to these positions, or perhaps even taken away. But we'll have to wait to see what exactly happened when those new results get published. So moving on to Digital. Here is a stock that over the last 2 weeks has gone from $4.20 to nearly $16. Nearly a 200% gain in 2 weeks. And we're not even done yet. So yeah, that's impressive. And anyone who happened to make a move during this long period of decline, well done, I gotta say. Now, to be honest, haven't really paid any attention to this company ever since I did my due diligence on it back in January. So, of course, when I see a move like this, I have to ask, okay, what changed? What's happening here? Because if you go year to date, yeah, the video I released on that was, well, let's double check that. So looking back on my older videos, I covered that company in 2 separate videos. The second was on January 12th, and my very first deep dive into it was on December 29th. So the price of Bit Digital, when I did my first video covering it, was $10.56. The second video on the 12th of January saw it at about $20 after reaching a high of 30. And then, of course, we've seen the small pump in February during the second run-up of Bitcoin, and then it just bled out from there on. Now, when I covered this company, I did not make any claims or necessarily side with whether or not it was a scam. There were just a lot of red flags. And considering their recent history, who knows what kind of action the Chinese government might take against them, considering it's well known that China is not exactly fond of cryptocurrencies as it is. Not interested. They are trying to establish a foothold in the United States for mining, and who knows, they might be successful at that. But I prefer to invest in a company with a more solid footing. And as I previously mentioned, the stock will continue to post significant single-day gains. I guarantee that day traders have no idea that this has happened. And even after this video, it will continue on. But if the rug should ever get pulled out from under it at any time, there will be a world of pain. Now, looking into it today, they have made a lot of changes. They've replaced the CEO, which happened a few months after I last covered it. And they had been already trying to relocate a lot of the facilities out of China. So having said all of this, I did go back and have a second look. There haven't really been a whole lot of news events that maybe suggests what or why this move is happening. However, what we did see was on July 27th, there was a fireside chat between Bit Digital CEO and Marathon Holdings CEO Fred Thiel. And seeing those two side by side certainly provided a whole lot of legitimacy to the new CEO over at Bit Digital. And he was fairly forthcoming about the challenges that they faced in exiting China. And luckily for them, they were already in the process of that exodus. The resulting crackdown from the Chinese authorities accelerated that to the point where they actually had to shut all of their equipment down and hightail it out of there, essentially. But they had already forged a lot of the partnerships required in order for them to relocate those machines. Now, we don't know at this point exactly how much or how many of those machines are already relocated and up and running. All they would say is that about 70% of their Chinese machines have been or are currently in transit to be relocated and plugged in. So obviously this has had a significant impact on their daily and monthly production rates. There was also a lot of concern back in January over the criminal charges that had been placed against their CEO and CFO at the time, or prior to that. They had been replaced with interim management, which now seems to have been replaced again. And now they have a whole lot more of a North American presence and North American management team. So it would appear they're trying to be taken seriously. But there is a caveat to this. The strongest argument for the move that we've witnessed is by far definitely a massive short squeeze. This is a company that may have been significantly over shorted. But if you go back and look at these fundamentals, you have to evaluate for yourself what it's worth to you. This company, I definitely appreciate that they have been forthcoming. This new CEO does seem to be legitimately engaged and seems to know his stuff. He had made reference to the fact that they had reported on their Q2 earnings and performance metrics, where we can see there was a massive decline in their Q2 Bitcoin production rate versus their Q1, where they had only produced nearly half what they had in the previous quarter, despite the hash rate dropping that entire time, or most of that time. And this, of course, is the result of the fact that part of the reason why the hash rate dropped was because of companies like them who were operating in China and were forced out, which fair is fair. So now they've reestablished themselves, they're expanding again, and maybe they do have a excellent growth opportunity here. As he pointed out, they have a lot of connections existing in China with a lot of those Chinese miners that were also forced to leave, and not all of them are so lucky as to be able to forge new partnerships in other outside countries that would allow them to continue their businesses, not to mention the capital costs of relocating. But on that note, we also find from this report that as far as, well, when we evaluate these companies, we have to look at a few things, namely, what is their current hash rate installed? And also, how much Bitcoin have they got? And this is where I would have some concerns in the sense that they do state here that they owned, as of June 30th, 32,500 miners with a total maximum hash rate of 1.92 exahash per second, a decrease of 40,965 miners and 2.26 exahash as of March 31st, the end of the first quarter. So they lost a significant number of miners, 41,000, due to sales and disposals of certain older miners, and also partially offset by newer used miner purchases. And they even give a breakdown of each and every model type that they currently have in their fleet. I like this level of transparency. This is a sign that they are turning over a new leaf, and this management is serious about this. This is a very good sign. Signs of a company that's not going to zero. But what is it worth today? That is a nice, impressive hash rate. It's basically the same as what Marathon is operating at right now. And Marathon's worth a whole heck of a lot more, right? But obviously, they still have to prove themselves again. And the other issue here that I see is their current treasury holdings of Bitcoin increased to 588.4 after having earned 562.9 Bitcoins. This is where I'm not entirely clear what's going on. I don't know how many, I guess we can go back and have a look and see what were their assets as of the end of Q1. At the end of the first quarter of 2021, they had 581 Bitcoin on the balance sheet compared to what we now know to be 588. What was that? 581 to 588. So it increased by 7 Bitcoin, meaning basically everything that they mined in the second quarter they sold. So they don't have a lot on hand. It's going to take them an awful long time to be able to catch up to a lot of the other players. And they're also going to be having to look at expanding, buying new miners. In this second quarter report, there really is no mention of cash or cash on hand. However, if we go back to the previous Q1, they do indicate that at the end of that quarter, there was $227,000 of cash, net cash on hand. So this is not a well-capitalized company. In order for that to change, they're going to have to issue an awful lot of shares to raise that capital or find institutional investors to buy in. It's great when things move up like this, but you do need to be careful. As fast as they can go up, as we all well know, they can come back down. Make sure that when you're making these investment decisions, they are for the right reasons, and consider what your timeline is. How long are you prepared to hold this thing for? After a move like we've just seen, odds are, yeah, you're going to get a better entry if you are interested in investing in this company long term. That's the way I see things. Again, not investment advice, just highlighting a few points maybe you might want to consider when making your own decisions. So I hope that was insightful or at least entertaining. I'm going to try and see what I can do about keeping the content coming. I really appreciate those that are still watching these videos. Your support means a lot to me. So while you're at it, if you wouldn't mind hitting the like button for the YouTube algorithm, I hardly ever ask for that, but it is very much appreciated. That's all for this one. Now let's get back to empire building.